Hello traders, today we are going to run through an old strategy that was covered on the RenkoTraders.com website. We are looking at the Renko engulfing bars trading strategy, and I hope that this video will make it clear for you guys on how to trade this setup, which can offer you a good risk reward. It can allow you to scalp the markets, or it can allow you to buy the dips in a retracement. To successfully trade the strategy, we make use of the Renko plugin indicator, and we employ using the wicks in the Renko charts, which is the basic or rather the most important aspect of this trading strategy. As you see on your screens, the strategy works on a very simple basis. You find a trend that is established. It could be a downtrend or an uptrend. Wait for a reversal Renko to happen and watch for the wick to make a higher high or a lower low when the trend changes, and then you enter after that particular Renko reversal break is closed. It is up to you on where you want to book your profits, and it basically is it comes down to your trading strategy. So let me show you the charts and illustrate this trading strategy in detail. What you're looking at is the AUD USD 50 pip Renko chart. There are a couple of markers that are very important in this trading strategy. When you have a trend, let's take a look at this example. Prices are in a downtrend. As you can see, you've got 1, 2, 3, 4, 5 bars that have been falling sharply. You need to wait for the reversal bar to happen, which is this bar. Let's mark it up. And an important characteristic of this bar is the low of this bar, the low of the reversal bar needs to be a lower low when compared to the low of the previous bar, as you can see here. This anomaly is what would prompt us to take a trade. So once the bar is closed, which is right here, once the bar is closed, you then enter at market on this bar. You can either ride the trend completely to the top end, which is right here, or you could do a 1:2 risk reward, which would be, let's say your stops are here, so 2 times would be 1 break, 2 break, maybe somewhere here. Yeah. So this is how you trade. Now on the same chart, I want to show you the pattern that you will come across quite often, and that is a failed pattern basically. Notice the high that's formed here. Now you do have a reversal bar right here, but if you notice, the low of the reversal bar is a lot higher compared to the low of the previous bar prior to the reversal. When you see this setup, it basically invalidates the short side. Sure, as you can see on your screen, the trade would have worked out, but again, in the longer run, when you keep trading this over and over again, you will notice that you would see more losing trades. So now let's go over again to work out a short trade. As you see here, we've got the high, which is at 0.73. Price then made a new high at 73.272. So when this reversal bar closes and below the low of the previous bar, you go short. Your stops would be placed at the high. You short at the market, and you can set a 1:2 risk reward. So you've got 2 bricks here. That would be 1, 2, 3, 4. And that's it. You just exit. Now you can improve your money management by moving your stop loss from the high to either the open of the bar, or move it to break even once price moves a certain pips in your favor. Now let's take a look at a long trade setup. So notice here, this is an interesting pattern that we find here. This particular bar basically fills all the criteria to go long. But as you can see, price kind of spiked and then fell lower. On the next chart, on the next candle, on the next Renko break, you can see that the low was taken out and then prices eventually moved higher. Now this is the risk that you need to be willing to accept, and just as there is with any other trading strategy, be it a moving average or stochastics, divergence, or whatever, you name it. So this is the live chart on the prices right now, and as you can see, this particular setup is again invalid because the high wasn't higher than the previous high. You have the wick here, so this pattern is invalidated. Let's quickly scan through a few other setups if we can find any. Now this chart setup that you see seems to be valid, but considering that you've got this bullish brick here, I wouldn't really be confident trading this setup. Okay, here is a good setup that you find. You've got a low. You've got prices which closed at the high above the previous candle, previous Renko break, and you go long. You set your stops at this low, and you set up a 1:2 risk reward, which is right here. So folks, as you can see, the trading strategy is quite simple. As long as you maintain a 1:2 risk reward setup, you can always be sure that any losing trades that you might have would be recovered by just one winning trade. You can apply your own money management rules, and as with most of the Renko trading strategies that I publish on my website, these are open-ended, so feel free to experiment with them, and if you do find something interesting, then let me know, and I would be delighted to see further development on the trading strategies. Now, just as I was speaking, I spotted another interesting pattern on the charts which I think is worth a mention. Notice the strong up move here, and you've got a higher high, and then you had a low which closed below the previous candle. So ideally you would be looking to sell right here. So with 1:2 risk reward, you are looking at a move till here. But instead of prices falling down, you have a fake move here, and then prices moved back up again before they started falling. Now, had you moved your stops to this particular setup, to the open price, after price moved down here, then on this particular move you would have been stopped out. But note that after that, prices started to fall back into the intended direction. So these are some of the risks that you need to bear in mind. I would basically advise to risk not more than 1% on a single trade. Start building your positions once you see that the trade is moving towards your favor, rather than having to blindly move the stop losses on every new brick that is formed. So guys, I hope this is helpful. If you have any questions, feel free to comment in the box and I'll be glad to help you out. Thanks and have a good day.